Hyperbitcoinization and strategic adoption. Professional analysis of Bitcoin's evolution. The narrative around Bitcoin has shifted from speculative trading to strategic, institutional adoption. What we are witnessing is the early stages of hyperbitcoinization, the process by which Bitcoin solidifies its role as a global monetary standard. This article will explain recent developments, provide in-depth analysis, and explore their implications for the broader financial landscape. 1. Accelerating adoption among U.S. signals. The term hyperbitcoinization describes a scenario in which Bitcoin achieves widespread adoption as a global reserve currency. Recent developments suggest that we are getting closer to this reality, largely due to the United States' expected participation in Bitcoin accumulation. This speculation stems from proposals such as Senator Cynthia Lummis's initiative to formalize Bitcoin reserves. If enacted, the United States would officially purchase Bitcoin as a strategic asset. This potential policy has sent shockwaves around the world, prompting other countries, states, and corporations to take precautionary action. 1. Forming a strategic reserve. Countries like Brazil and corporations like MicroStrategy are leading efforts to accumulate Bitcoin. The potential move by the United States is seen as a tacit endorsement of Bitcoin's legitimacy, prompting competitors to act quickly to avoid being left behind. 2. Finite supply and scarcity economics. With only 21 million coins in existence and millions already lost, the remaining liquid supply is rapidly decreasing. Every Bitcoin that institutions buy reduces access for others, fueling the race to accumulate. 3. Bitcoin's appeal as a hedge against inflation and fiat currency instability has increased amid rising geopolitical tensions and shifting monetary policies. As central banks continue to grapple with rising debt levels, Bitcoin offers a transparent and decentralized alternative. 2. Brazil has emerged as a prominent player in the Bitcoin adoption narrative. Legislator Eros Biondini recently introduced legislation to create a Bitcoin Sovereign Strategic Reserve Fund, RESBID, with a proposed allocation of $18.6 billion, equivalent to 5% of Brazil's international reserves. Strategic goals: a reduced dependence on fiat currencies and traditional financial instruments. Protect against currency volatility and economic shocks. Use Bitcoin to power a Brazilian central bank digital currency, CBDC. In line with Bitcoin's role as digital gold, Brazil's Bitcoin adoption is not new. Cities like Rio de Janeiro have been integrating Bitcoin into their financial frameworks since 2018. However, the scale and ambition of this proposal signals a major shift. If the initiative passes, Brazil will join the growing list of governments that consider Bitcoin a strategic reserve asset, further legitimizing its role in global finance. 3. U.S. states and corporate Bitcoin accumulation. In parallel with national strategies, individual states such as Pennsylvania have introduced similar legislation. The Strategic Bitcoin Reserve Act seeks to allocate 10% of state funds to Bitcoin and cryptocurrency exchange-traded products, ETPs. 1. If more states begin accumulating Bitcoin, the U.S. could indirectly establish decentralized reserves. This would complement a potential federal initiative while also promoting financial autonomy at the state level. 2. States operating independently would create an environment where regional entities compete to accumulate Bitcoin. This would drive demand and potentially drive the price up further. 4. Businesses are also recognizing the need to move into Bitcoin. For example, Jeev Technologies, an e-commerce company, recently approved a $1 million Bitcoin treasury allocation. The announcement fits into a growing trend of companies diversifying their treasury holdings into Bitcoin to hedge against macroeconomic risks. MicroStrategy, under the leadership of Michael Saylor, has set the gold standard for corporate Bitcoin adoption. A MicroStrategy holds over 150,000 BTC, acquired through debt issuance and strategic capital allocation. The company's actions have inspired other businesses and validated Bitcoin as a legitimate corporate reserve asset. Broader corporate trend. Companies are using Bitcoin as an inflation hedge amid growing concerns about fiat currency devaluation. Early adopters are positioning themselves as leaders in a Bitcoin-centric financial future. 5. Implications for market liquidity. The the scarcity of Bitcoin has become a major topic of discussion. With large-scale accumulation by countries, states, and corporations, the availability of liquid Bitcoin is rapidly decreasing. Contrary to the belief that Bitcoin is evenly distributed, mining operations in regions like China and corporations like MicroStrategy control a significant portion of the supply. Despite the misconceptions of a ban, the Chinese government continues to monitor mining operations. Estimates suggest that China may hold hundreds of thousands of Bitcoins. A MicroStrategy's holdings. The company's 500,000 Bitcoin holdings highlight how centralized accumulation can distort market dynamics. Long-term implications. The increased volatility as liquidity dries up, price swings may become more pronounced. Higher floor. Institutional accumulation reduces the elasticity of supply, setting a higher floor over time. 6. Bitcoin's price trajectory remains a hotly debated topic. While short-term volatility dominates the headlines, long-term forecasts are increasingly bullish. 1. Institutional forecasts. BlackRock CEO Larry Fink predicts Bitcoin's market cap could exceed $50 trillion, eclipsing the U.S. real estate market. Such a valuation implies a price per Bitcoin in the millions of dollars. 2. 2024 to 2025 cycle expectations. Analysts predict trillions of dollars in Bitcoin inflows as ETFs are approved and more governments and institutions announce their participation. 3. Altcoin correlation. As Bitcoin dominance increases, altcoins such as Ethereum, XRP, and Solana are also expected to experience significant price increases. However, Bitcoin remains the focus of institutional investment. 7. The ongoing accumulation of Bitcoin has profound implications for global wealth distribution. Institutional dominance of Bitcoin could further concentrate wealth, limiting access to retail investors. Countries and corporations that hold Bitcoin are better placed to weather future economic crises than those that rely solely on fiat currencies. The current accumulation phase presents a unique opportunity for individuals to build wealth for the next generation. However, failure to act could result in missing out on the most important wealth transfer of the 21st century. 8. Key takeaways for investors. For those in the crypto space, the message is clear: act decisively. Accumulate gradually. Dollar-cost averaging remains an effective strategy for mitigating volatility. Diversify wisely. While Bitcoin should be the core of any portfolio, high-potential altcoins can provide additional returns. Focus on long-term returns. The market's potential far outweighs short-term corrections. The dawn of a Bitcoin-centric financial era. The story of Bitcoin adoption is no longer speculative. It's happening in real time. As governments, corporations, and individuals realize its potential, Bitcoin is transforming from a niche asset to a cornerstone of global finance. For investors and stakeholders, this is a pivotal moment. The question isn't whether Bitcoin will reshape the financial world. It already has. The only question is whether you seize the opportunity or stay on the sidelines.